Hello everyone, and markets have been bouncing around a little bit of late, getting a little bit of air, getting a little bit of height, and that volatility and that tendency to randomness, as you can see in the background there, is likely to continue, I think, because what I've noticed over the last few months, one thing I've noticed about markets is that one day's price action doesn't necessarily turn into a trend, shall we say. So yes, US stocks are pushing on with that rally, but it doesn't look to have a real lot of energy, and I wouldn't be surprised if we get an equally strange kind of immediate turnaround to the downside. That said, on the day you would have to be respecting that there is a little bit of impetus to the upside in markets. The Australian market outperforming to the upside. Why? I don't know. Maybe it's because Brisbane's going to host the 2032 Olympic Games, which was decided yesterday in Tokyo, which is well done, Brisbane. The economic data in the US wasn't very good, but earnings were good. And remember, I've been saying for a little while now that inflation is actually going to be good for earnings because it's a product of businesses and companies and organizations raising prices. So that's why you're going to see an improvement in earnings in the short term. So inflation is good for corporations in the short term. It's bad in the long term, obviously, because directly it reduces the consumer's buying power inevitably, and also it tends to force central banks towards tightening cycles, or at least removing stimulus cycles, as would be the scenario here. And I think one thing central banks should be doing immediately is certainly all around the world pretty much winding back on their bond buying programs. It's kind of just a license for stock bulls to print money of late, and that seems to be a pretty constant theme around the world. Certainly in Australia we have no reason for bond buying, so I think the RBA should step away from that straight away, but we've discussed that before. On interest rates, obviously, we're looking at a stagflation situation going forward. We're definitely going to have, we were going to have slowing economic growth anyway, and the Delta strain is proving to be a bigger irritant and problem than many thought it would. As I warned all along from the very, very beginning, vaccinations were not a silver bullet. The UK is seeing its biggest case numbers for a long time right now, and it's a very vaccinated nation. Israel saw another Delta surge and it was highly vaccinated. We've discussed this before, but people have to get it out of their minds that vaccinations are some kind of secret weapon that just totally solves the problem. They help, and you should have them if you can, but you should also continue to practice all the other social distancing and mask type concepts to further support your defense. Because, Delta only reduces and it sounds like a big number, but Pfizer only reduces your chances of serious illness and hospitalization by 90% against Delta. That means 1 in 10 people who have Delta are still possibly going to end up seriously ill. So if you've had Pfizer vaccinations, well done, probably a very good choice, but you should also wear a mask and practice social distancing. In Australia, we're seeing this steady, slow creep, but a very relentless one of the Delta variant around the Sydney region and now in Victoria, and elsewhere in New South Wales and a little bit in Queensland as well, South Australia, Darwin. So by no means are we in some kind of everything's okay period, which is what so many economists were forecasting. And what I'm saying here about Australia is very true about every country around the world. So wherever you're viewing this, vaccinations are great, support that effort, but don't rely on it to be 100% effective because it simply isn't. In terms of the inflation Delta variant scenario, the bond market, people are saying, oh, inflation means the market goes one way and Delta variant means it goes the other way. We're going to have stagflation. We're going to have slowing economic growth with skyrocketing inflation. It's unavoidable. And that is a very difficult economic scenario indeed going forward for central banks, for all of us. It will certainly mean high volatility financial markets going forward over the next 1 to 3 years, maybe as long as 5 years, because it won't be a problem that's easily solved. In fact, it's the most difficult economic scenario you can have, is slowing economic growth and skyrocketing inflation, and that is exactly what the United States faces, Australia faces, most of the world faces at the moment. So really interesting, really challenging, full of opportunity times ahead. I mean, it's so important whenever you're investing and trading in financial markets or any financial asset or any asset. For instance, the property market in the US is probably peaking about now in terms of prices. You have to plan and think your worst case scenarios ahead of time. And unfortunately, the worst case scenario for global economic growth at the moment is probably the most probable scenario. So I would be very much looking to diversify your portfolio still. I know it's been a little bit volatile in gold, but I still like it. I know it's been a little bit volatile in oil, but I still, we've done very well with the bearish outlook there, and it's just had this spike to the upside. Could have a little bit more momentum, a little bit like stocks. I don't think we're beyond volatile price action though in generally sideways markets, which could still turn out to be a major top. Respect the immediate upside in markets, in stocks, but do be wary that it might not last. And it's a very difficult situation at the moment. But unfortunately, I'm very confident of my economic forecast, which is slowing economic growth, skyrocketing inflation. Very interesting times ahead. I'm Clifford Bennett, Chief Economist, ACY Securities.